is standing by with us, and Somit, now these fuel prices have been slashed, but what does it mean for these OMCs? How does it impact them, the oil marketing companies?
Well, if you see, it's a triple whammy for the oil marketing companies. Firstly, given the fact that petrol and diesel prices have been cut by around 2 rupees per litre. Apart from that, Brent crude prices have surged back to $85 per barrel level because of lower US oil inventory and because of the attacks that we had seen on the Russian refinery. And the third factor that is negative for the oil marketing companies currently is the fact that Singapore gross refining margins have been trending lower on a sequential basis. Now, who will bear the brunt of this? Well, it will be Indian Oil Corporation, HPCL, BPCL, as well as Reliance Industries. Now, because of this cut of 2 rupees per litre on petrol and diesel, the gross marketing margin that the oil marketing companies earn by selling every litre of petrol and diesel, that would come down. For petrol, it will come down to around 5.4 rupees per litre, and for diesel, it will come down to around 1.4 rupees per litre. And do remember, theoretically, every $0.5 per litre drop in the gross marketing margin lowers the annual EBITDA for Indian Oil Corporation by around 7%, for BPCL by around 8%, and for HPCL around 11%. So the impact of this lower gross marketing margin or the cut in fuel prices will be felt more by HPCL. Apart from that, if you see earlier, the Prime Minister had announced the cut in LPG prices as well by around 100 rupees per litre, and with this cut of petrol and diesel, nearly 75% of the total volumes that the oil marketing companies done have seen a price reduction in the last 10 odd days. Apart from that, if you see, the Singapore gross refining margins have been on a declining trend. In December 2023, they were at around $6.7 per barrel. Post that, they surged to around $8.7 per barrel in the month of January, but have now come down to just $6 per barrel level in the month of March. And the impact of this, again, every $1 per barrel drop in the gross refining margins it lowers MRPL's EBITDA by around 1,000 odd rupees. For Chennai Petro, it lowers their EPS by around 30 odd %. For Indian Oil Corporation, BPCL and HPCL, it decreases their earnings by around 14 to 16%, and for Reliance Industries, it impacts the consolidated earnings by around 4 to 5%. But when it comes to the petrol and diesel price cut, what now needs to be seen is that is this just a 1 quarter impact for the oil marketing companies, and how crude prices trend now going forward. Now they are currently at $85 per barrel. If they increase further, then the gross marketing margin for the oil marketing companies could take a further hit going forward.
Samit, thanks so much for taking us through that. So, OMC.
If you like this video, then like, share and subscribe to ET Now.